Dan Roberts, editor-in-chief of Decrypt, is with us today, one of our favorite guests on Real Vision, to talk about everything that's happening in the crypto universe. Dan, welcome back to Real Vision.
Great to be back. What's up, Ash?
Not much, man, or I should say rather a lot. It's been actually a slow 2 or 3 days heading into into Thanksgiving, but lots going on in this space. What are you looking at, Dan, right now?
Well, it feels to me like the most pressing conversation of the moment in our world, and that could change in 24 hours, is Ethereum. And that umbrella has multiple things within it. I mean, of course, the whole DeFi and NFT world's really spraying from Ethereum in general. Yeah. But most recently, we had this debate erupt on crypto Twitter, which is where everyone in my world lives at all times, about the gas fees and the usability of this network. And, you know, maybe in some ways it's been cursed and hurt by its own success, but since the NFT boom has really heated up and since DeFi protocols have heated up, the gas fees have gotten a lot higher and the wait times have gone up a little bit more. And you're hearing people talk about a time when maybe they would consider, people who otherwise wouldn't have, these so-called Ethereum killers. Now, none of them yet has really been a killer, but these ETH alternatives, Solana, Avalanche, those tokens have surged recently. And as I mentioned on Twitter last weekend, I feel like the Ethereum gas fees wars got really hot and heated with a lot of prominent VCs saying this is unacceptable, it's becoming unusable. And I think that's fair. I'll tell you, Ash, just for fun, a while back, we created some Decrypt NFTs. They were pretty stupid. They were just photographs of our dogs, photos of dogs of Decrypt staff members. And I thought, well, no one's going to want these. And yet we got a few bids for like $6 US. So I went to accept one. I said, great, I'm going to send this person the NFT. And OpenSea wanted $150 in Ethereum gas fees to accept a $6 offer. That's ridiculous. That's unusable.
So did the user get his dog NFT or what, man?
No. And in fact, it's someone in the crypto world, I think not a journalist, but like a crypto lawyer, but he keeps joking on Twitter. Every time I tweet something, he responds, I want my NFT of your dog. And I keep saying, I want to send it to you, but the gas fees.
So let's break this down for people particularly who aren't in the NFT space now and who haven't used Ethereum for a transaction. Let's explain to them what Ethereum gas fees are and some of the challenges on the network right now.
Well, this is a measure to keep the network up and running. And by the way, ETH is also always being burned as a measure that helps with the scarcity. And so the way this network goes, the more people that use it, the more activity that is happening, the more bogged down it gets, the higher the gas fees are. And at times when you see, say, a new NFT drop that's really hot, so Bored Ape Yacht Club, is one of the most prominent recent ones, very hip and cool. When Bored Apes have done something, whether it was a new drop of Mutant Apes, anytime there's some big prominent moment, the gas fees on the whole Ethereum network get thrown off and become really high. And a lot of people think that this defeats the purpose. I mean, the whole initial value proposition of crypto was faster and cheaper than traditional remittances, right? Like in the old days, your buddy is in a foreign country, needs money right away. You would have to go to the walk-up window at Western Union. They'd say, okay, that'll take 3 days and you owe us a $45 fee. And crypto was supposed to fix that. And you've got all these people who think Ethereum is incredible, Ethereum's the future. Well, now the gas fees are too damn high. And the gas fees are in a form of Ethereum. And on networks like OpenSea, these NFT marketplaces, you pay for everything in WETH, WETH, which is wrapped Ethereum. Yeah. I don't even want to go too far down the rabbit hole there. But the point is, to use the Ethereum network, there's a cost.
Ethereum doesn't meet its own ERC20 standard for being able to transact on it in the way that you would other ERC20 tokens. So what happens is you have to wrap it as an ERC20 token, and that's really why you'd use WETH rather than ETH.
And by the way, if you are trying to do a transaction at a time when the network is really busy, you are basically looking at prohibitive costs unless the value of your transaction is high enough that you think it's worth it to eat the costs. So what a layperson really needs to understand is just that defenders of these gas fees who say, well, that's the cost of doing business, these are very often, unfortunately, people who are already crypto rich. So they don't mind. So, to go back to this kind of war of words that erupted over last weekend on crypto Twitter, you had some people saying, that's just the cost of transactions, and that's because it's the best, most reliable, safe network. A lot of people talk about, well, the security. Ethereum has prioritized security. But I'm kind of with the critics in the sense that, it shouldn't become that Ethereum is a place where only the people who've been early enough to crypto that they've made a bunch of money and they don't mind eating these high gas fees can use it. I mean, usability matters. Don't you want to onboard new people into crypto? And if the cost of a transaction is greater by orders of magnitude than the actual value of the thing you're trying to buy or sell, then what are we doing here, right? I have to pay $150 to sell someone an NFT for $6? It's just ridiculous. I don't see how that's defensible.
Yeah, it's a total non-starter in terms of getting broader adoption on the network. It's probably important to point out that these fees, the rise in these fees, is actually kind of a sort of fundamental victim of their own success type of scenario here. These are the fees that miners are paid to secure the Ethereum network. With the popularity of the network, with the increase in demand for the network, the fees have risen along with it. But as you say, look, that's all well and good to say we're a victim of our own success. But in terms of the pragmatic usability of this network, if people have to pay a $120 fee to do a de minimis transaction, it's not really democratizing finance.
That's exactly right. And by the way, your explanation of ETH gas fees was better and more succinct than mine. So kudos. I like that. But, I'll say that this isn't the first time this has happened. Years and years ago, although, of course, the numbers of people, the volume was far, far lower, but CryptoKitties in 2017 and 2018 crashed the Ethereum network, or at least bogged it down. And what's interesting there is those were NFTs. We just weren't using that acronym widely. So, I don't want to send us too far down the rabbit hole here, but there are a couple examples in crypto, like the term NFT, of things that I think have become buzzwords and soon will just stop being used. Metaverse, even Web3 is starting to already become kind of uncool. It's been co-opted. But, we just weren't using the term NFTs, but CryptoKitties were early NFTs, and the game got so popular that it slowed down Ethereum. Now it's happening again, but now it matters much more because, the TVL, total value locked, is so high on Ethereum and on DeFi pools that this stuff really matters. Now, of course, I understand those who are, maximalist has become a dirty word, but ETH maxis, who say to the Solana fans, well, yeah, of course Solana is faster and cheaper because the numbers aren't even close. If Solana were to get much, much, much more popular, Solana would probably be bogged down too. And by the way, Solana already once crashed for almost 24 hours. So, it's hard to see a definitive winner per se.
By the way, we should also say that Ethereum is now just a skosh under $500 billion in market cap or total network value. So this is an extraordinarily important sort of protocol in the space and also just in the world more broadly. I mean, in CryptoKitties, it was just the nerds who were covering this back in 2017. I know I was one of them. It was a fascinating idea, but not one that had gained sort of mainstream currency the way it has now. I will, though, argue a little bit about the flip side of the argument. The reason why these protocols are so popular and the gas fees have risen so dramatically is because of the power of these networks to actually create value, to do things that were never possible before. The idea of NFTs is a fascinating one. We focus kind of exclusively on the digital collectible art use case here, talking about it as a photograph of a dog, but NFTs really are a digital fingerprint that is unique to a specific token, and that means you can do a whole lot of different things with them beyond just what we're seeing right now in the collectible space. My own thesis is that we don't really even know what NFTs are yet. NFTs can be wallet addresses, NFTs can be community membership, NFTs can be a mechanism for validating things, NFTs can be used for ticketing, for all kinds of applications that we're just beginning to scratch the surface of. So the idea that these gas fees are rising dramatically because of underlying demand for the network, ultimately, it's a bullish sign for the interest in this space. But it does sort of beget the question, as you suggest, Dan, which is how do we fix this problem when transaction fees are $120? I mean, if I want to go do something down at Chase, people complain about paying $25 for a wire fee. This is, 5x that. These are extraordinarily high numbers for low value transactions. This is a technology challenge, an economic challenge that has to be solved, or the space is not going to be able to just move forward and gain the wider purchase that its adherents and the people like us who are really passionate about it think that it can gain.
That's 100% right. And there's so much there. I mean, first of all, what Ethereum people will tell you is, well, just hold on because ETH2 is coming. Ethereum 2.0 is coming. It's going to fix a lot of this. Now, of course, it's already kind of emerged that moving from proof of work to proof of stake, which, yes, it will use a lot less energy, but it might actually not really solve the gas fee problem so much. But it remains to be seen. But, for months and months, we've been hearing ETH2 is coming soon. It's coming soon. Just hold on. So there's that part of it. Some people's retort is just wait. It's going to get better. But when we talk about NFTs, I mean, that's a whole big bucket. I tend to agree with you that, we don't yet know what the best use case of NFTs is going to become. But to go back to my point about, jargon and acronyms too, I think that the umbrella within NFTs is getting so variated and interesting that soon it's going to become a household name thing and you're going to stop hearing NFT. Like just today at Decrypt, we covered the fact that the Collins Dictionary came out and called NFT its new word of the year for 2021. Really big sign of how mainstream it's gotten. But I tend to think eventually everything will just be called tokens. A token could be your Twitter profile picture. A token could represent a ticket, a physical ticket to a sports event. A token could be a cryptocurrency. But we don't need to, distinguish between all the different types. They're all tokens. And, I mentioned the NFTs that were just photos of our dogs. To be clear, I think that form of NFT is already close to dead. The celebrity cash grab, digital trading card, or just a static image. The cooler NFTs that are going to have value in the long term have to do something beyond just, here's a thing I can share. Either, like you said, it's tied to a ticket, it's a pass, it's your membership into a club, it gets you into events. Bored Ape has done that. And regardless of what people think about the art, some people think this is stupid, but I'm really impressed with the community and the fact that if you own an ape, it's a lot more than your Twitter profile picture. It's your access ticket into a club with all kinds of perks.
Yeah. By the way, I know it's kind of a semantic debate, but it's a fun one, talking about how the sort of the names of the technologies disappear. If you think about it, when you're FaceTiming your mother, you don't say, "Hold on a second, I'm on the internet." You just say, "I'm talking to my mom. Can you give me a minute?" Right. So this idea, I remember this with smartphones. Right. They're personal digital communicators. Right. Like they're just phones. Right. The technology begins to go into the background, and the functionality emerges as the primary thing that we focus on. Talking of which, here's why I'm bullish about these challenges getting solved. I think that technology, if you look at the history of technology and development, problems of cost always get solved. When problems arise from things being too expensive, even if it's an order of magnitude too high, which I think most people agree that Ethereum gas fees are, this is a technological problem that engineers are very good at solving. It's not like waking up in March of 2019 and saying, "Oh my God, how are we going to come up with treatments for this terrible pandemic? How are we going to come up with a vaccine?" Those are scary open questions that you can't figure out. Something like costs, I really think that given a long enough time horizon, whether it's 1 year or 3 years or 5 years, we're going to get this sorted out. Am I being too optimistic here, Dan?
No, I think that, history indicates you're probably right. I also have huge faith in the smarts of the people who are working on this, the devs. But there's a key issue maybe in what you just said. You said, 3 to 5 years maybe? And the issue is, if this stuff is going to keep growing, adoption needs to continue. And for now, adoption has been kind of in two forms, right? And neither one is really mainstream. Like we talk about, people say, "Oh, DeFi's gone mainstream." Not really, it hasn't. I mean, the amount of value is huge. The dollars are big. But if you look at the data on the number of actual users, i.e. individual human beings using DeFi protocols, it's something like fewer than 2 million people. That's very small. And so when we talk about adoption is growing, adoption has been either crypto people, and that's not even us, that's people smarter than us. I mean, I don't know to the extent you're using these tools, but real crypto people who've already been using this stuff for years, so they're savvy and familiar, they speak this language. Or it's rich people, non-crypto people, who are just putting money into it, but they're using someone else. So institutional DeFi, what that really means is hedge funds and family offices that are giving their money to someone else who puts their money into these tokens. Neither of those, to me, really means mainstream. For it to go mainstream, the friction has to be dramatically reduced. You talk to a regular person, and I have a bunch of friends who've said, "I'm ready to buy an NFT. I want to buy an NFT." But it's so intimidating. And, you and I might think, well, come on. No, it isn't. But if you think about it, there's a lot of steps. You have to go to an exchange and buy some ETH. Already, it's like, Okay, so sign up for an account, connect it to your bank account. Oh, do you feel safe? Okay, let's say Coinbase. All right, you feel safe enough. It's a publicly traded company. It's legit. Now you buy ETH. Now send the ETH to your MetaMask wallet. There's a scary moment where you send it and there's like 2 minutes where it's gone. Poof, where'd it go? Then you get the confirmation. Okay, good. The ETH is in my MetaMask wallet. Now you go to the NFT site and you pay in ETH. And it's like, for most regular people, that's a lot. So when you say it's going to get solved in a few years, it better get solved real fast. The gas fees and the usability, the UX.
Yeah, these are such critical points. I don't know that I would say it's intimidating, but it is a sort of a daunting process. It's something, and it's also not a lot of fun if you're not someone who loves this space and who likes to play around with this stuff. I think you're totally right. This idea that DeFi has gone mainstream. DeFi has not gone mainstream. Stories about DeFi have gone mainstream. You can read about it in the Wall Street Journal, but it's not mainstream. It's like the old joke about Pauline Kael saying she couldn't believe Richard Nixon had won because no one she knew voted for him. We spend all of our time in this space talking to people who completely geek out on it. And we forget that most people, yeah, sure, they've heard about DeFi, but it really is kind of an arduous process from a UI, UX perspective. In terms of how long it takes to solve, I think you're absolutely right to focus on that because that really is a key question. If it's something that can be solved in 6 months or 12 months, I think it bodes very well for the space. If it's something that does, as I said on the sort of the outside estimate number, take 1, 2, 3 years to solve, you might wind up with a period where you have another crypto winter.
Absolutely. I think that's very possible given the exuberance the prices have reached. I try to almost never make price predictions, but just as a side note, I will say this is the closest I'll get to a prediction. But even though I think a major correction is probably coming sometime in the next 12 months because it has to, I tend to think the buy-in is big enough and the belief is big enough and it's mainstream enough that it's hard for me to see a percentage drop happening as dramatic as the one in 2018. Like a 75% price drop. Maybe I'll be wrong, but it's just hard for me to see that. I don't know that anyone knows exactly what's going to happen next with prices, but that's just something I believe. But there is something else I want to say. I don't want to get us too off topic, but I also love how freewheeling these chats are. When you say, Ash, that we in the crypto media spend all our time talking to other crypto people who geek out about this stuff, I really think there's something there. And at Decrypt, we really try to prioritize being welcoming and clear and lucid to crypto newcomers, people who aren't already experts. And I'll give you an example of what I think is still the bifurcation between mainstream or what do we call them, normies, and crypto people. And I think crypto people forget just how many people still see it as niche. It's not niche, but there's so many smart people, smart finance people who still just, they want nothing to do with it. Last week, and we can talk more about this, but the Constitution DAO effort, where a DAO, a decentralized autonomous organization of strangers, pooled $41 million worth of ETH in a matter of days.
And let's not gloss over that. Let's explain what that means.
Well, it's meant to be a leaderless organization. It's decentralized. It's the future of companies. There's no one in charge. There's no middleman. It's so cool. It's all about the group mentality, and everyone has equal voting rights, all of which is wonderful. But my little, nag about DAOs is you can call it decentralized, but still someone created the thing. I mean, there has to be founders. It didn't just pop into existence. There's usually leaders. But very often now they don't want to give their last names because the spirit of crypto. But these are leaderless organizations, decentralized groups. Usually they live on Discord, the chat app. And a bunch of like-minded people pool their crypto toward a goal. Maybe it's buying a bunch of NFTs that are high value that they can then flip and split up the profits. The one that happened last week, which I think was the most mainstream moment we've seen for DAOs so far, was an effort to bid on a rare physical copy of the U.S. Constitution at Sotheby's auction. And like I said, they raised $41 million. That was amazing. They didn't win. They lost the bid. And to get back to my point here, what was so remarkable to me was the split between crypto people who right away their take was, well, even though the Constitution DAO lost, we won. Because what a big moment for DAOs. It showed what DAOs are capable of. And then on the other hand, I had multiple friends, very smart friends who work in finance or business or tech, pointing out the loss and saying, this thing is so effing stupid. Look at these losers and morons who put a bunch of their money in. They lost. It was chaotic. During the Sotheby's auction, even people who had donated to the DAO had no idea which person bidding was representing the DAO. It was very chaotic and disorganized. And it allowed people who already think all this stuff is stupid to point and say, see, stupid, disorganized. And that is remarkable.
I don't know about that. That's a hard sale. Listen, they almost bought the Constitution. Listen, we should also point out who won the auction, because it is sort of this weird, sort of dramatic effect. It's like if you were writing this as a movie, you would probably have Ken Griffin, the billionaire founder of Citadel, actually beat the DAO. I mean, there's like this great Empire Strikes Back feel about it.
You know, we called it. My colleague and I did a weekend column about it. We called it poetic. I mean, you couldn't have possibly scripted it any better. I tweeted when we found out that it was Ken Griffin that it felt like the reveal at the end of a Scooby-Doo caper. Like, who? You know, he takes the mask off and it's like, surprise, it's Ken Griffin, who already didn't like crypto and had a hand in the GameStop short squeeze and, you know, the kind of bane of Wall Street bets and Reddit traders' existence. And that's the guy. And then Akoda, guess where he's going to display the copy of the Constitution? At the museum in Bentonville, Arkansas, owned by the Walmart heirs.
Yeah, you really couldn't write it any better than
Crazy.
this.
But, you know, I had a friend, you know, it's actually a mutual friend of ours, but he DM'd me our recent story about a different DAO. It's a DAO that aims to buy an NBA team. Now, of course, good luck with that. Not going to happen, you know, and ha ha ha. And we said that in the story, but it's still interesting because a group of strangers have raised $2 million in like a week. Now, you're going to need $2 billion to buy an NBA team, so I don't think it's going to happen. But this friend DM'd me our Decrypt story and said, these people are so effing stupid, meaning the people who gave their money to the DAO. And I thought that wasn't very fair, although I understand what he means. But anyway, all this has been a roundabout way of saying there are still a lot of smart people who just can't buy into the Web3 revolution, you know?
Listen, I'll take devil's advocate here. In no way is this a loss for DAOs. They raised whatever the number was, $47 million to buy this copy of the U.S. Constitution. They came pretty close. I think that this is just a question of time before we see a DAO actually go through and purchase something and win an auction, whether it's a copy of the U.S. Constitution or a piece of art. I think an NBA team is a little bit more far-fetched, probably a bridge too far, at least for now. But look, this is the real deal. This is here to stay. The idea that you can have individuals collectively pooling capital to do things in ways that are, let's just call them less decentralized and less hierarchical than traditional corporations. I think this is a revolution that's as large as the joint stock company. People thought that those were fraudulent for decades as well. If you go back and you look at the Mississippi bubble, the John Law Company, these are real innovations in the way that capital creation gets done. I should also add maybe a bit of hesitancy on this point, which is regulators have yet to weigh in about this. And so particularly if you're buying something like an NBA team, obviously this is something that's going to need regulatory approval. So that's a significant challenge. But look, I think it's really hard to look at the Constitution DAO, point and sort of snicker and say this was just a silly failure and a dream that was something that was impractical. The reality is we are seeing before our eyes, even with these initial failures, we are seeing something new under the sun in terms of the way that capital formation happens, in terms of the way that people communicate and pool together to do things, whether they are creating new protocols, developing software, or potentially buying things in the real world. This is an absolute revolution.
I agree, and I love the optimism. I agree. I think that there's a way to go to maturing. Like in crypto, the move fast and break things mentality of tech is kind of even more apparent. It's like someone put that on speed. So when you look at Constitution DAO, you know, one takeaway is, wow, a group of strangers raised $41 million in like 4 days. Amazing. And it is, like, full stop. But, surprise, surprise, it was chaotic and disorganized, and people who had put their money in had a lack of information. To go full circle to our Ethereum gas fee conversation, the DAO, now that it has lost, instead of putting the funds towards something new, has decided to disband. That means it will have to refund contributors their ETH, but minus gas fees. So people who donated as little as $100 or $200 are going to get close to nothing back because of those gas fees, which that isn't great. But again, maybe it's the cost of doing business. And then the other issue happening with DAOs, Ash, is it is so exciting. It is so cool. They're forming so fast. But as a result, buyer beware, big caveat, because a lot of groups are calling themselves DAOs, but then you can't just take their word for it. Is it really a DAO? I mean, technically, a DAO should have some kind of economic tool, and that's usually a token, its own governance token. If it's just a group of people who are pooling money, then really it's just a Discord server. It's a chat group of strangers who have pooled their money. And then, as I mentioned, a lot of DAO founders or leaders, even though they're leaderless, they are pseudonymous. They won't share their name because they think, well, we're decentralized. Well, I guess all the people giving money to DAOs are comfortable with putting their hard-earned money into a wallet address where they've never met the people face-to-face and maybe never seen them face-to-face and maybe don't know their real names. So there are some steps there, and my point is just some people will never quite get there. Certain people are never going to hook up a wallet and send their money to a group of strangers in a chat room.
Yeah, but the opposition doesn't have to be converted. They just die out or retire or stop participating. Look, I'm certainly not arguing that the implementation or the method of execution here is perfect. What I'm saying is that we are seeing a framework, albeit in an incredibly early phase. This is the Wright brothers kind of stuff. And to say, oh, well, that's silly, the plane only flew for 43 feet, it probably misses the point. This is precisely the kind of thing that engineers are good at, right? They're good at increasing stability, decreasing costs, and increasing efficiency. And if you think about that, as these changes accrete week after week, month after month, year after year, decade after decade, it's really hard for me to believe that we're going to be having this conversation in 2031 and say, oh boy, these collective schemes for the pooling together of digital capital and decentralized networks, that was just a silly idea, wasn't it?
Well, I agree with you that they're here to stay. That's for sure. And some people have compared the recent activity, both the rise of DAOs and the NFT boom, to the ICO boom. I don't think that's a good comparison. I don't think that's fair. Although your point about the uncertainty with regulation is really important. I like the idea that the critics don't need to be converted. They'll just be proven wrong. And there's another great example of a critical take right now that I love picking apart, and that is the popular thing on Twitter of no-coiners, as they're called, or crypto skeptics, responding to tweets about NFTs by saying, I just right-click saved. There, now I own it. No, you don't own it. And I understand their point that anyone can take a screenshot and display it. That's totally true. I mean, that's not even, there's no argument there. I can say, look at my Bored Ape that I paid $30,000 for, and someone else can say, I took a screenshot and now it's my profile picture. Sure, but I own it. They can't move it. I'm the only one with the keys to the address that can sell it. So, the Mona Lisa thing has kind of become a punchline, but it's the truth. Anyone can make their Twitter profile picture the Mona Lisa. It doesn't mean you own it. And I just think that's so funny that drum that the NFT skeptics keep beating. It's like they think if they say it enough, it'll become true and the whole market will collapse. And by the way, prices are going to fluctuate. And every time a new chart comes out with showing that NFT prices went down for 2 weeks straight, they come back out of the woodwork and they say, see, NFTs are dead, NFTs are dead. They're not dead. It's a marketplace, just like with crypto prices. When Bitcoin goes down 10%, say, see, I was right, Bitcoin's dead. Maybe Nouriel Roubini says it. But NFTs are going to be like that. I believe it's here to stay, but I agree with you that we haven't even yet seen the really compelling use cases of it.
Let me tell you one of my favorite metaphors for this. I was just rereading one of my favorite books, Brideshead Revisited. It's a story about a guy who goes to Oxford in the 1920s, eventually fights in the Second World War. And there's a section at the beginning of the book where he's talking about going to Oxford for the first time. And he's talking about the drunkenness that he encounters there and the kids and this new culture that he's never experienced before. And one of the lines is he says he's going into a dorm room and everyone has the same damned reproduction print of Van Gogh's sunflowers hanging on the wall. Now, what makes this funny is when I was going to college in the late 90s, everybody had prints of Van Gogh's sunflowers hanging on the wall. Here's the point. Here's why it's relevant to NFTs. The reality is reproduction does not diminish the value of the original. It increases it dramatically. The fact that kids hang silly prints of Van Goghs in their dorm rooms at college doesn't diminish the value at auction of the original paintings. It dramatically increases them. Indeed, we've seen those impressionist pieces go for over $100 million. So this idea that you can right-click and save and somehow you have something that is a competitor for the original, I think that's a foolish paradigm. And I think it doesn't really fundamentally understand either human nature or the underlying technology, the promise of the technology, the ability to retain an economic interest in something, the ability to collect for example, cash flows on something like a copyright. This is a fascinating space. We're just getting started. Sometimes these things look a little bit silly, but it comes back to the Wright brothers and the airplane and the first attempts at flight. We're looking at something that's very, very
I agree completely.
early.
And Alexis Ohanian, who's been very smart on all this stuff, And by the way, quick side note, to all the people who think the NFT boom is completely stupid and they're out there, well, what do they say to these very smart people in tech with proven track records of betting on the right things who do believe in it? I mean, are they just idiots? Are they wrong? Have they been suckered? But Alexis Ohanian, the co-founder of Reddit, has tweeted out at times his NFTs, including a Bored Ape. And just the other day, he responded to one of those people who said, I right-click saved it. He said, please do, and please promote it and use it because it only makes mine more valuable. And I agree with that. I think that over time, certain collections will rise and fall. I mean, I'm not saying that I think Bored Apes are going to be worth $100,000 per in 10 years. I don't know. But I think all this stuff is interesting, and I think that the form is here to stay. And if the best thing you can say right now to dismiss it all is, I just took a screenshot, I mean, okay, I can take a screenshot of anything. I can take a screenshot of someone's terrific article that they publish. Doesn't mean I wrote it.
Yeah, I think that's so well said. The form is here to stay. By the way, this is definitely a case of one of those two things can be true at the same time. Google Max drawdown Bitcoin, you'll see the number, it's about 83.5%. Look, drawdowns happen. This is what makes markets markets. The ability of people to bid and offer at different price levels. The fact is, one of my favorite charts, and I'm just going to describe this. I know we're going to put it on the screen, but I'm going to describe it for people who are listening to this on the podcast. Go up to Yahoo Finance and take a look at a chart of Amazon from 1999 to 2009. If you bought Amazon at its peak in 1999, you lost like 90% of your value and you stayed underwater for something like 7 years. Now, if you were making those arguments, there's a famous Barron's cover with Jeff Bezos on it, and it's basically talking about the collapse of Amazon. And boy, that was a silly idea. And wasn't this internet thing kind of silly? And it's not going to be a single individual who's going to accumulate a huge amount of value for it. They had some thesis, I think, about how everyone was going to open up their own web store. And I mean, look, you look back on these things, and there are two things that sort of stand out. First, it's incredibly hard to make predictions about the future. Second, great technology ideas can be too early and they can be massively overbid. You can lose money on NFTs.
Yeah, surprise.
You can lose money in crypto. That's not a doubt, right? You can lose money speculating on equities. You can lose money speculating on meme stocks. You have to understand things like asset allocation if you're an investor. But look, the reality is the technology, the fundamental promise of this technology to create decentralized networks of value, the ability to create decentralized networks of trust, of identity. These are things that we've never before seen. And it is something that is a dramatic improvement, at least in principle, from the way that things are run now when you have middlemen standing between just about every transaction that you want to execute. Like, Dan, if I decide I want to buy a car from you, like a used car, right? How do we do that in 2021? I physically go down to Chase Bank. I show them a picture I show them my photo ID. They issue me a check if I have the funds in my account. I take the check, I drive it over to wherever you are. You look at the check, you try and make a determination whether it's a forgery. You go, I guess this looks okay. You sign over the pink sheets to me. I mean, look, this is like an incredibly antiquated 20th century or even 19th century process. This is the way that we do high value transactions. Now, look, you can say, well, I can just Venmo it to you. Guess what? The max value on Venmo is $4,999, right? So this is a problem that has still not been solved. And when you see this technology, fundamentally, it's creating something that we've never seen before, the ability to transact without middlemen in a secure, trustless way.
I agree with all that. And I think that other use cases for on-chain transactions are going to pop up. Like, there's some that we've heard about for years and they still aren't really there. I mean, you heard about blockchain for real estate. You could store the deed to your house in the form of a token. And I think there have been some people trying to do that. But for the most part, you're not seeing them yet widespread, but I think you will. But I want to pick up on something else you said, Amazon saga. It's really interesting. I mean, the biggest lesson in hindsight, and it's always like, hindsight 2020, but just hold on and wait and have patience. And of course, back in the day, not that long ago, that was what you're supposed to do in the stock market. You're supposed to just leave it alone, own it for most of your life. You're not supposed to be a day trader unless you're a day trader, just own stocks and leave them alone. But amid the pandemic, with the rise of the retail investor and the Reddit, YOLO trader, people are much quicker in and out of trades. People who aren't professional day traders, they're buying GameStop and then they're selling it 3 days later. And you see the same mentality with newcomers to crypto, and it results in questions like the one I just got yesterday. I mean, we've talked a little bit about, we're both interviewers and the types of things we ask people. I did an interview yesterday with a non-crypto outlet, and I was asked with a straight face, well, tell me why I should get back into Bitcoin, because I had $100 worth and then the price plummeted and I sold and got burned. And why should I get back in? And it's like, well, that's your first problem is you bought at the peak and then panic sold when it went down. Of course, there's volatility in the short term. And I know I sound like such a believer and such a bull when I say this, but it's just a fact. Zoom out and look at that line over 10 years. And it's up and to the right with some dramatic corrections, yes. But you shouldn't be buying anything, whether it's stocks, crypto, bonds, commodities, an ETF, with the thinking of, it better go up big in the next 2 weeks. You just buy it and leave it alone for years. But the problem is, the rise of certain things, like how about these Metaverse tokens? People are now used to in crypto seeing 700% gains in 2 weeks, that the minute something crashes a little bit, they say, oh, failed investment, now I'm angry.
Well, listen, let me throw in a counterpoint to the counterpoint, which is when the case of Amazon, there's also something called survivorship bias that's very much in play here as well. If you've done the same thing with pets.com and said, I'm just going to be patient capital here and hang back and wait to see, a $20 bottle of bag of kitty litter get delivered for $23.95, I'm going to make money on volume on this, you lost a ton of money. So there is definitely survivorship bias. There are no sure bets in this world, except perhaps to look at the rise of technology. Moore's Law has been something that has continued to unfold decade after decade. The increase in computing power, the decrease in cost, this is something that's a durable trend. Now, I suppose that trend could reverse tomorrow, or the second derivative on the change can change. But fundamentally, this revolution that we're fortunate enough to be part of is something that really is changing the fundamental functionality of the way that finance, commerce, business, and even day-to-day life get done. What does that mean for the price action today, tomorrow, next week? Very hard to say. Now, look, there are people who are using things, very sophisticated on-chain metrics to do shorter-term price regression analysis and try and figure out what's correlated to what. But again, to your point, Dan, that's not an investing function. That is a trading function.
Absolutely. And by the way, there's also kind of two, if not many more, subworlds of crypto, or at least propositions, right? Like one is investing. And that's what tends to get the most attention. I mean, there's still websites that they're only going to write when it's Bitcoin goes up, Bitcoin goes down. Bitcoin crashes 12% in a day, they point and laugh and say, see, Bitcoin's too volatile. And people see that headline and go, oh my God. Or Bitcoin surges to new all-time high. Now it's at 70,000. Then they all write, and they freak out, wow. And then the cycle's going to continue where newbies buy in, wow, hoping to hop on the rocket as it goes up. But then, surprise, the next day it goes down big and they say, oh my God, and they freak out and sell. That's all the investing side, and that's what gets a lot of attention. But then there's the culture, the other use cases, the arts, the entertainment. I mean, we haven't even talked about how the music world has gradually and then quickly, quietly and soon louder, really gone big on NFTs. I mean, suddenly there are just tons and tons and tons of really interesting, exciting things happening with NFTs and music. We don't even have to dive in on that, but my point is, it doesn't all have to be about token go up, token go down. But that's what gets a lot of the attention, and also I think what causes a lot of the misinformation. Like, look, every week we hold a Decrypt live video chat. We basically do what you and I are doing now, but it's live and viewers can comment, and 80% of the comments are bag holders. Maybe they're real humans, maybe they're bots, and they're pumping the one token that they own a lot of. XRP to the moon, buy XRP. Or, Doge, SHIB. But that's just only one part of the crypto universe,
Yeah, totally. Absolutely. Listen, trading is fascinating. We spend a lot of time talking about trading here on Real Vision. But the point is, know whether you're an investor or whether you're a trader. Understand what your time horizons are. Understand what your risk tolerance is. And if you have, talk to a professional if you can to get things and understanding on things like asset allocation, so that you have the ability to understand what your own risk tolerance is. How much you're going to need to save for your kids' college. These are things that it's almost impossible for someone who doesn't know you to tell you. We can talk about the potential valuations of different assets, but understanding what those functional buckets are in your own portfolio and knowing where you can afford to speculate, absolutely crucial point. I know that you guys have been covering, to change gears here to a point that you just made, stuff that's happening in the music space. For people who aren't following this story, give us a quick overview on what's happening in music and NFTs.
Well, sure. I mean, first of all, people just have to understand the idea that even once you own an NFT, in many cases you can resell it. In many cases, the NFT allows copies, but usually those additional versions or every resale of the one NFT give a cut back to the original creator. And so a lot of people look at this and they see a chance for creators of all kinds. That's a big umbrella. That could be writers, that could be musicians, to actually get paid more for their work than they have in the past. I mean, I think a lot of people forget the streaming revolution, the music streaming revolution, has not been good for artists. I mean, most of them, unless you're Taylor Swift, they get like a penny per play, or even fractions of pennies every time their music is played on Spotify. I think we quoted in one of our stories a group that had something like 20,000 plays in a given year, which is not nothing for a new band, and they got sent a check from Spotify for like $6. Right. That sucks. Now, if they could issue each track in NFT form, and that would allow not only their fans to be more engaged with their music, but the creator to get a bigger cut every time someone buys the NFT, all kinds of new opportunities emerge. And so you've seen some real big names get in on this. I mean, Kings of Leon put out their new album as an NFT that you could do multiple versions of. Now we have Blau, Justin Blau, 3Lau, as it is stylized, has started a new platform called Royal, which is all about, putting out albums and singles in NFT form. Then you have, Euler Beats, which are NFTs that each one has a unique digital piece of sound, a 30-second clip with a little record spinning on a turntable, and those have sold for tons of money, and every time they're resold, the original owner makes a cut. So there's just, the sky's the limit here in terms of the possibilities, and I think you're going to eventually see a world, I really think this, where why wouldn't you, if you're an artist, also put out your music in NFT form? You got nothing to lose, unless you truly just think, I don't believe in this stuff and I'm going to be made fun of. But more and more and more artists are getting in on this. Timbaland, Cypress Hill the other day. The examples are far and wide. And again, just like we said earlier, who knows the additional use cases that we could see? I mean, Mark Cuban talking about NFTs for tickets, and that could cut down on scalpers. We've seen people put out NFT versions of their essays, writers doing it.
Yeah, I mean, scalping can effectively completely disappear. If ticket resales are via NFT and the owner of the ticket, initially the issuer of the ticket, I should say, controls an economic interest in the future of that ticket, what difference does it make if someone sells it for, 10x what faces? It can't be scalping if you're participating in it. I think that's an entire concept that may fall away. You could have markets actually determining prices based on supply and demand, and the retained economic interest compensating the issuer of the ticket for wherever that price lands. And who knows, that's determined by the demand at any given time. I also think it's fascinating to talk about the music industry. I think anything that empowers artists is an awesome thing. And anything that has the power to create more value for artists is a great thing. By the way, we should say it is true that the streaming wars were not great for musical artists, but it's not as though the music industry was a paradise for artists during the vinyl days or the CD days. Artists always made a lot of their money on the road, at the gate, from concessions, things where you could physically count the money at the end of the night. So, this is a problem of long standing and not one that was created by the digital era.
All of that is true. And by the way, when you said, cut down on scalpers and the market could actually determine the value of the ticket, imagine the free markets could determine the value. I mean, pretty great. And by the way, the same goes for the actual token prices. Like, I love using the example of Mr. Market from Mr. Graham and Mr. Buffett, right? People talk about Bitcoin and they say, some of them said it was crazy at 20,000. Well, Do you think it's crazy that it's 65,000? Who's to say what's crazy? And the answer is the value of something digital is whatever a large enough group of people determine it to be. So enough people think that a CryptoPunk is worth hundreds of thousands of dollars. Many people look at that and they say this is inane, this is stupid. But enough people are paying for it and value has gone digital. And so, the ticketing thing is interesting. Now, of course, It also goes back to what we agree on, which is the UX better get a lot smoother. I mean, if Mark Cuban ever wants Mavs fans to have an NFT ticket that gets validated on chain, you better have a better form of mobile smartphone access. And, there's an OpenSea app. Yeah, there's a MetaMask app, but these things are still pretty clunky. It better be universal and smooth. And then, of course, there's the other, not just a crypto problem, but sports events that now require you to show a smartphone. Well, there are still people, I know a cynic would say, oh, they'll die off, but there are still people who don't have a smartphone. Well, so are you pricing them out? Are you blocking them out because they don't have a phone that can access blockchain to show their NFT ticket?
Well, I think, QR codes can certainly be printed, but to your broader point, the UI UX experience is not where it's going to land if we're going to get widespread adoption. There's just no way.
Exactly.
My mom is not signing up for a MetaMask wallet. It's just not going to happen, right? And in terms of the, the sort of the value of a thing, this is so too of gold, a barrel of oil, the price of any given security currently trading in public markets. Look, there are abuses of this. There are times where it gets out of control. This is why Gordon Gekko makes that cynical line about war, famine, the price of a paperclip, we determine it. The reality is that there are obviously weaknesses to markets. There are abuses of markets. There are things that can happen with markets. But as sort of Churchill said of democracy being the worst form of government, except for the rest, market economy is the ability to freely buy and sell things. It may be the worst economic system, except for everything else.
100%, right? Now, of course, the market manipulations and the people taking advantage, and in our world, increasingly we call them rug pulls, right? DeFi rug pulls. So a bunch of people put money into a protocol or a wallet. Surprise, the wallet disappears. Squid Game token, for example. Those, again, still tend to get outsized media attention. And, I can rail all day about the misinformation spread by media, especially when it comes to crypto. And it's not just crypto that this happens with, but I feel like it heavily happens in our world. But at the end of the day, people are very, very impressionable based on headlines they see. And for every headline they see about, hey, here's a really cool, interesting use of crypto, or here's why crypto is going mainstream, or look at these people in India who don't have bank accounts but got paid via crypto. For all those headlines, there's probably 3 per that say, look at this scam and look at all these good, decent people who got scammed out of their money by crypto. And they just determine, this is a criminal enterprise, this is scammy and shady. I don't know if that's going to go away or when it will cut down.
Yeah, but the reality is greed was not invented by decentralized networks. This is something that goes back. We talk about, the history of bubbles. Nouriel Roubini, who you mentioned earlier, one of my great mentors, has written about this extensively. The John Law company, the Mississippi company. I mean, all of these companies were joint stock companies were used to do incredibly shady things. And by the way, hundreds of years later, we had the 1933 Securities Act, because precisely this type of activity was happening, about 90 blocks south of where I am right now. You saw precisely the type of greed and fraud and general ugly behavior happening to scam people out of money. Does that mean that the corporation is a form of governance and organization of human activity that's fundamentally flawed? Of course not. There are people who do things that are abusive. There are people who do things that are abusive in this space. Look, US dollars and euro, physical banknotes, currency notes are used for all kinds of horrific activity that no one would support. It doesn't mean that everyone who carries around a $20 bill in their wallet is a criminal.
Look, I like to say the tech is agnostic and the tech is apolitical. Of course, crypto and politics have begun to merge in interesting ways, and the politicians who have proven to be pro-crypto are maybe not the heroes that some people in crypto wanted. But the point is, Bitcoin is a technology. So people say, oh, it's for criminal, look, hackers like it for ransom. Sure, but hackers also love dollars. I mean, eventually they convert it to dollars. The tech is agnostic. It's just about how you use it. You can use it for great things. You can use it to exploit people. But I do think, again, that there's still a huge learning curve and education that needs to happen. And that's what we seek to do. I know that's what you seek to do. DYOR, do your own research, and do your research from places that actually understand it and explain it in a neutral way. I mean, I'm a believer in a multi-chain future. There's Bitcoin maxis and ETH maxis. I think it's all interesting, and I think that there will be multiple winners, not just one winner in this race.
Yeah, and you never get the heroes you want. Look, I think these are all incredibly interesting points. I would also say one of the things that's interesting to me about the support and opposition for digital assets in the political sphere is it's one of the fascinating things to me is that this idea that it's one of the few sort of subjects of debate that doesn't line up neatly along partisan lines in 2021. It seems to be more generational. There are people of a certain generation, certainly in the Democratic Party and the Republican Party, who just don't like this technology. They don't like the idea of the state being weakened. They don't like the idea of the state being decoupled from the money supply. And then there are younger people on both sides of the aisle who say, no, this isn't about weakening the state. This is about strengthening American competitiveness, for example, here in the U.S. And so that's a fascinating debate, really, because like everything in 2021 splits down, it seems, these very hyper-partisan lines. Not necessarily the case with crypto.
Well, and even within crypto, over an 11-year period, there has been a dividing of the philosophies and the reasons certain people have flocked to crypto. In the early days, it was very heavy on the libertarians and the Roger Ver types, Eric Voorhees of Shapeshift, the people who loved that, screw the banks and screw the government and everyone get away and this is why it's so great. Now you've got people who are very much in the system, the Anthony Scaramucci's, who totally have bought into crypto as an investment, but they're not in it because they love that it cuts out the government and the banks. In fact, they want regulation. They want government oversight. They think that's going to make it safer and provide guardrails. And so that to me is still a fascinating push and pull, the philosophical tension among people who are at least united in the fact that they like crypto. But you've got people who are still the diehards, and yet let me look at the fact that crypto people, I think, at one point thought that Donald Trump would be a friend to crypto. They thought that it kind of fits with his overall views about government and the role of government, that he would like this stuff. No, he doesn't like it. Mostly probably because he doesn't understand it. And then, as you said, you don't get the heroes you deserve. I mean, who would have pinned Ted Cruz as the big crypto flag waver, right? But probably not the hero crypto people wanted, but probably the hero they deserve.
Yeah. And look, it's always a continuum, I think, particularly with regard to regulation. There are people on the sort of the one far end of the issue who are sort of, the anarcho-capitalists who believe that there should be no government regulation or intervention of any kind. You have people on the extreme opposite end who just want to completely ban this technology, to sort of strangle it in its crib. I don't think that's going to happen. I think most people fall somewhere in between. As always, the devil is in the details about how we hash through some of these issues about where regulation takes place. Look, I think fundamentally here in the United States, this is an issue of global competitiveness. If the United States Congress, for example, decides that they want to really, in a meaningful way, crack down on cryptocurrency, and regulators then continue to execute that plan to crack down on cryptocurrency. By the way, I should say regulators have, I think, exhibited a large amount of forbearance to let the space develop to the place where it is today. Now, there may be people who say, well, they didn't have the right to regulate it in the first place. But I'm just pointing out the reality is we got to a multi-trillion-dollar market capitalization because regulators did not go after people who participated in the space unless there was clear instances of fraud and abuse. But here's the bigger point. The reality is, if the United States decides to turn its back on this technology through legislative and regulatory enforcement, it's not going to stop the rest of the world. It's kind of like your strategic rivals get a vote. They don't walk away from this technology just because you decide to. So I think it's in the national interest of the United States and the economic interest of the United States to figure out ways of pursuing this technology so that it can move forward and to actually create value for Americans who were obviously at the forefront of the last revolution with the internet.
Well, and by the way, when you talk about regulation, a point that I want to make sure that I hammer, that I really believe is like, regulation does not necessarily have to equate to shutting down. I think a lot of people in crypto have freaked out because of Gary Gensler's repeated comments, including things like he thinks most tokens look like unregistered securities. He's worried about KYC, know your consumer, and AML, anti-money laundering. A lot of these exchanges aren't, doing those checks to the full effect. fine. That's not the same as him saying, shut it all down. And I don't believe that he wants to shut it all down. I mean, you know, I think people kind of take it too seriously. Same thing with the Senate infrastructure bill. The entire crypto industry went up in arms because they didn't like the scope of the language that defined crypto brokers. And at some point, someone in crypto decided that could even mean miners, individual miners. It doesn't. They're not going to tax individual miners. I don't even think they would know how to begin to do that. I mean, I think when they said crypto brokers, they mean the obvious companies. They mean Coinbase and Gemini and Kraken and Binance, you know? But people just get so up in arms and they get their hackles up. And a lot of people out there get scared of the word regulation. Regulation doesn't have to mean that it's a shutdown. And like most things, the truth lies somewhere in the middle. You know, some people want them to not touch it at all. Some people want them to shut it down. It's like, there probably should be some form of protection for people so that they don't lose their shirts, putting money into a Uniswap thing, you know?
Yeah. Dan, we've blown through almost an hour and we haven't even gotten your views on the metaverse yet. What's going on there? What are your thoughts? I know you guys are covering this. You're covering Facebook/Meta. Tell us what you're thinking.
Yeah, it's a good way for us to end, to reward people who've watched a full hour of us, because I have thoughts. You know, first of all, like many buzzwords out there, the metaverse is not a new thing. I mean, Facebook wants to come out and plant a stake in the ground and try to own the metaverse or coin it as their term. And, you know, they'll get away with the rebrand because it's Facebook. They have 2 billion users. Fine. You know, we all make fun. But just like any other dumb company name, in 2 years, we'll be used to it, calling the company Meta. Fine. But the metaverse existed. I mean, The Sims, Second Life, these were games that basically represented the metaverse. We may not have been calling it that yet, although, by the way, even the term is not new. I mean, go back to Snow Crash, you know, by Neil Stephenson. Go back to Neuromancer. These things have already been concepts that a lot of people are familiar with. Even MMORPGs, you know, massive multiplayer online role-playing games. These are forms of the metaverse, but now we're trying to make it this new thing again. And Facebook's vision of the metaverse is pretty lame, man. I mean, that video that they put out with Zuckerberg and he joins a meeting and one of them is a giant animal and look, we can fly, but we're also meeting. Okay, it's still a Zoom meeting at the end of the day. I mean, it's still a work meeting and it still sucks. Like, it's just so funny to me, the idea of trying to own the metaverse when really now we're just using metaverse as a term to mean the future of the internet. We're just talking about the internet. Games you play on the internet, online worlds. And those have existed and will continue to exist. Now, the other irony with all this is that even while crypto people and cynical tech journalists make fun of Facebook and ridicule it, Facebook has totally, this is objectively true, brought new attention to the metaverse, the thing itself, the term metaverse. And it has helped send metaverse tokens up. You know, Sand, the token of the sandbox. Mana, which is the token of Decentraland. These are crypto metaverse games that have native tokens, and those tokens are up like 700% in the last month. And even though the people who play those games probably think Facebook is stupid, they should be thanking Facebook because the attention has caused a surge in their tokens. So there's good and bad, there's hypocrisy and truth, and it's all interesting to me. I mean, you know, is Facebook too big to fail? I hesitate to say that, but with 2 billion users, a large number of people are going to at least try anything that Facebook launches.
Yeah, absolutely. I think it's ultimately good for the space. I'm a little bit cynical, or maybe skeptical is the better word, of some of Facebook's ideas in the space. But look, I think it's great that they've come to the table, that they're participating in it, that they're hiring thousands of people to participate in the development efforts. I think that's net positive for the space. And as you say, it's increased a lot of interest in it. And it provides a gateway, I think, for people who may have had a harder time because of the current UI, UX issues, user experience, user interface issues to get into the space. It gives them an easy way to do it because, hey, you know, billions of people already have Facebook accounts. By the way, does anyone call Google Alphabet?
No.
Do you call Google Alphabet?
No. It's a good point. And by the way, when Facebook came out with the new name, people said, I guess Fang will be Mang now. It's like, I guess, but it's like you say, people are still going to refer to Facebook as Facebook. And, you know, side note, Facebook itself, which now really just refers to Facebook.com, the UX there sucks. I mean, when was the last time you used Facebook? I don't know about you. I haven't opened it. It's noisy. It's lame. But I use Instagram every day. I check it, 30 times a day. And that's Facebook. And I use WhatsApp. And that's Facebook. They have successfully, wisely spread their bets. So anything they do, I mean, yeah, they ruined Oculus, but anything they try is going to at least have a number of people. We haven't even talked about the Facebook crypto play, which is now, it was Libra, it was Calibra, now it's called Novi, and it's going to launch as a stablecoin wallet. We have written about it and made fun and been skeptical, but some large number of people are probably going to try Novi because they have 2 billion users.
Yeah. Dan, there's so much more for us to talk about. You're going to have to come back and have this conversation with us more often.
Cheers. Always. Always willing to come back on Real Vision.
Dan Roberts, a pleasure to have you here, man.
Thanks, Ash.